Let's imagine you're a company that buys products from a Chinese supplier asking for payments in Renminbi. Then you sell those products to a client in Europe who pays in euros. Your business, however, is based in Hong Kong, where you pay employees in Hong Kong dollars. You as a business now have to juggle 3 different currencies in order to run your business smoothly. Moreover, depending on what the foreign exchange market is doing, the value of those currencies will fluctuate between each other. If your corporate bank account only handles the local Hong Kong dollar currency, then you'll need to exchange the currencies both when you pay and get paid immediately with the bank, costing you an exchange rate fee, and also while keeping you entirely at the whim of the exchange rate of the very moment the exchange happens. That's why these days, businesses who do cross-border payments often choose a multi-currency account to give their business the edge they need to save money and negotiate better deals. Before we get into what exactly is a multi-currency account, don't forget to like and subscribe to our channel to learn more about the financial world that we live in. A multi-currency account is a type of bank account that allows companies to receive, pay, and hold more than one currency in the same account. The key feature is that the account details like the beneficiary name, account number, and SWIFT code all remain the same for every currency supported in the account. Multi-currency accounts are offered by most banks in Hong Kong, and they usually include, at a minimum, the following currencies: Hong Kong dollars, US dollars, euros, British pounds, Singapore dollars, Japanese yen, Australian dollars, and of course Chinese yuan. A multi-currency account helps save time, money, and effort when your business makes and receives payments in several currencies, meaning that any cross-border business dealing with multiple currencies will benefit from having a multi-currency account. For instance, a multi-currency account is useful if your business trades internationally, be it shipping or importing or both, if your company operates an e-commerce store that sells goods or services in multi-currencies, or if you employ staff that works abroad or freelancers who work overseas, and also the situation where you're an independent contractor or freelancer who works with international clients regularly. Here are some examples of why companies are choosing multi-currency accounts. Obviously, the first benefit is that you can communicate the details of only one account to multiple clients and customers. Another benefit of a multi-currency business account is your annual accounting becomes a whole lot easier. You or your accountant will spend much less time reconciling your books, as you now have the ability to issue invoices in one currency and get paid in the exact same currency without having to calculate the exchange value of the day the exchange happened. The third benefit takes a little bit of role playing to understand. Let's assume your company only has a single currency account, which is your business's local currency. Now, a client makes a payment in another currency, let's say USD, then your bank will convert this currency into your home currency to deposit the funds into your account. This currency exchange will happen immediately, regardless of the exchange rate. And of course, your bank will charge a substantial foreign exchange commission to convert these funds. For a business that relies on a lot of payments from multiple currencies, these commissions can add up pretty quickly. One of the biggest advantages of a multi-currency account is to avoid the payment of foreign exchange commissions. Funds paid to your company in one currency are credited to your multi-currency account without the need for any conversion, assuming, of course, that this currency is one of those accommodated by your multi-currency account. Another benefit of a multi-currency account is that you can easily move money between different currencies whenever you want. Even if the objective is not to become a foreign exchange day trader, it gives businesses the opportunity to buy and sell currencies when the exchange rate is more favorable. The best news yet is that banks usually do not apply any exchange fees on these internal account transfers. And lastly, for businesses who deal with international clients, but most importantly, when it comes to suppliers, there may be demand to be paid or pay in their preferred local currency. This usually happens when the local currency is experiencing stronger growth in the forex market, and the buying power of that currency clearly benefits the supplier when being paid. By handling their local currency in a multi-currency business account, businesses can now directly pay in their supplier's currency without the need for any exchange rate to be involved. This gives more leverage to companies who deal with suppliers that are experiencing a strong local currency price, and in effect gives them the ability to leverage their local currency preference when negotiating deals with their suppliers. If all of this sounds like it would work well for your business, consider opening a multi-currency account in Hong Kong. Hong Kong business accounts are typically multi-currency and are usually accessible online.